Hi, this is John Coumarianos for Real Investment Advice and Clarity Financial. Well, on Wednesday of this week, we recorded the longest bull market of all time, 3,453 days. We wanted to depict for you what an investment in the S&P 500 did over this time. We took this back to the beginning of 2009. The bull market technically started on March 9th, but we just took it back to January 1st to make the math easier. So if you invested $100,000 on January 1st, 2009, all the way up through Wednesday, you finished at almost $400,000. So the market has basically quadrupled since early 2009. That's a really long bull run. We want to tell you to be a little bit cautious, though. I wanted to also depict for you what the market did from the year 2000 through 2009. Remember, we had two bear markets during that decade. So if you invested $100,000 back in 2000, at the end of 2009, a full 10-year period, you had about $90,000. So that's about a 1% average annual loss for that 10-year period. So the lesson here is we've had a tremendous bull market, no question about it, but markets don't always go up for long periods of time, and you want to be a little cautious. Here's the next reason why we want to be a little bit cautious. This is a graphic of a metric called the Shiller PE. It's a PE ratio with the earnings, the denominator in the fraction, representing the last 10 years average earnings. And you can see the long-term average is about 16 or 17 for this metric. That means people pay about 16 or 17 times earnings for stocks over the course of history, and this goes back to 1880. Right now, we're at 32 on this. You could make a case that the economy is different now than it was back in 1920 or in 1880, so maybe the average should be a little higher, but 32 is awfully high. And when it's been this high in the past, future 10-year returns have been low. So investors should be a little cautious. Doesn't mean you should sell out of all your stocks now by any means. Keep your allocation steady, but go back and check your allocation and make sure you're prepared for some declines, because things could get choppy in the future from this starting PE ratio. Anyway, this is John Coumarianos for Real Investment Advice and Clarity Financial. Thanks for watching.